Charting is an invaluable tool that helps traders profit from momentum. Here we look at the moving average convergence divergence, MACD, histogram, a measurement of the difference between the fast MACD line and the signal line. The MACD is a momentum indicator that can be used to anticipate changes in market sentiment. However, it is not foolproof. Experienced traders look to other metrics, such as trading volume, for a more complete perspective on market sentiment. The MACD as a lagging indicator. The MACD is an indicator that uses exponential moving averages, EMA, to determine trend strength along with entry points based on crossovers. Traders who use the MACD indicator often are critical of the fact that it may signal an entry after the initial move has begun and therefore leave pips behind. As such, many traders wanting to enter a trade sooner dismiss it as a lagging indicator. A lagging indicator is a technical indicator that uses past price data to formulate the actions of the indicator itself. Therefore, all indicators are lagging since they are computed on trading data that has already taken place and then factored in with what is occurring. In the case of the MACD indicator, the most widely suggested entry signal is when the MACD line crosses over the signal line in the direction of the trend. Since these two lines are simply two moving averages, by their very nature the crossover will not occur until the move itself is underway. Some traders prefer this method of suggested entry as it offers more confirmation that the move is more likely to continue in that direction. However, the MACD histogram can offer an earlier signal to enter. MACD histogram. What does the histogram represent? The histogram or bar chart included in the background of the MACD, see images below, displays the difference between the MACD and signal line. When the MACD is above the signal line, the bar is positive. When the MACD is below the signal line, the bar is negative. The actual height of the bar is the difference between the MACD and signal line itself. MACD histogram. The signals from the MACD indicator tend to lag price movements. The MACD histogram attempts to address this problem by plotting the distance between MACD and its signal line. Because of this, the histogram signal's trend changes well in advance of the normal MACD signal, but is less reliable and should be confirmed by other indicators. Only trade with histogram signals when the market is trending. The MACD histogram can also be used to track longer cycles, using weekly or monthly data. Trading signals use stop losses with all trades. Ranging markets signals are stronger if there is a bullish divergence on the histogram, or the signal occurs far from the zero line. Disregard signals close to the zero line unless confirmed by a divergence. Go long when the MACD histogram turns up below zero. Close the position when there is a signal to go short. Go short when MACD histogram turns down above zero. Close the position when there is a signal to go long. Trending markets only trade in the direction of the trend. Signals close to the zero line are accepted provided the trend is intact. Go long when the MACD histogram turns up below zero. Go short when MACD histogram turns down above zero. Standard MACD is the 12-day exponential moving average, EMA, less the 26-day EMA. Closing prices are used to form the MACD's moving averages. A 9-day EMA of MACD is plotted alongside to act as a signal line to identify turns in the indicator. The MACD histogram represents the difference between MACD and its 9-day EMA, the signal line. The histogram is positive when MACD is above its 9-day EMA and negative when MACD is below its 9-day EMA. Momentum trading can be a nerve-wracking experience. If done right, you can rack up a lot of profit quickly. If not, you can falter and make wrong buy/sell decisions that can send you down a spiral of losses. One tool to help traders in momentum is the use of the MACD indicator and the MACD histogram. Here, we will discuss how you can make the most out of it. How to read the MACD histogram. Traders use the MACD histogram to identify potential trend reversals and price swings. When the histogram is positive, i.e., above the baseline, that means that the MACD is higher than its 9-day average, signifying a recent increase in upward momentum. When the histogram is below the baseline, the